Right now, the United States is carrying more debt than at any point in its entire history. More than $30 trillion, and rising faster every single second. But what makes this moment so terrifying is that the debt bubble today is even bigger than before the 2008 financial crash. And if something breaks again, the consequences could spread across the entire global economy. Yet most people have no idea just how dangerous this situation is becoming. So the real question is, how did America's debt get this big? And what happens if the system finally breaks? To understand the danger, you first have to understand the scale. The United States national debt has surged to levels that once seemed completely impossible. For decades, the debt was growing slowly. Then suddenly the line began to shoot upward. After the financial crisis of 2008, governments around the world began borrowing massive amounts of money. Trillions were borrowed to stabilize the economy and keep the financial system alive. But instead of slowing down, the debt only continued to grow faster and faster. When the financial system nearly collapsed in 2008, governments had only one solution. Central banks began printing enormous amounts of money to rescue the economy. This policy became known as quantitative easing, flooding the financial system with liquidity. Interest rates were pushed near zero, making borrowing easier than ever before. Governments, corporations, and even households began borrowing more and more money. Slowly, an enormous global debt system was being built, one that the world had never seen before. Then in 2020, the world was hit by a crisis that would change the global economy overnight. Businesses shut down, millions of people lost their jobs, and the economy suddenly stopped moving. To prevent a complete economic collapse, governments unleashed massive stimulus spending. Trillions of dollars were injected directly into the economy through stimulus checks and emergency programs.
Got another one. This helps so much.
Me too. Straight to the bank.
I got one.
In just a few years, trillions more dollars were added to the national debt. And suddenly, America found itself carrying the largest debt in its entire history. But after years of cheap borrowing, something suddenly changed. Inflation surged across the economy, pushing prices higher everywhere. The rate hikes are aggressive,
It's working. Inflation is cooling.
but we must watch for side effects. Agreed. We'll reassess at the next meeting. Suddenly, borrowing money became far more expensive. For governments already carrying massive debt, this created a serious new problem. Because when interest rates rise, the cost of servicing that debt explodes. and now the consequences are becoming impossible to ignore. America now spends hundreds of billions of dollars every year just paying interest on its debt.
In fact, interest payments are now rivaling some of the government's biggest spending programs.
The more debt a country has, the more interest it must pay. And sometimes, governments even need to borrow money just to pay the interest. Which raises an uncomfortable question. How long can this system keep going? But something unusual is happening in the bond market. Demand for U.S. debt is starting to weaken. For decades, the world helped finance America's spending. But that support may not be infinite. Interest payments alone are becoming one of the largest expenses in the entire federal budget. When debt grows faster than the economy supporting it, long-term stability becomes fragile. Year after year, spending continues to expand faster than revenues.
The projections are dire. We must act now.
But cuts will hurt programs. It's not that simple.
We need a bipartisan plan or the debt will explode. Exactly. Compromise is the only way.
Every time the ceiling is raised, the underlying pressure continues to grow.
Central banks often step in when markets become unstable.
When markets struggle, liquidity is often injected to stabilize them.
Easy money can push asset prices higher than fundamentals justify.
Housing markets often feel the effects of cheap credit first.
Easy borrowing can quietly build enormous levels of consumer debt.
Entire generations are entering adulthood already burdened with debt.
Corporations have also taken advantage of cheap borrowing. Modern economies are deeply interconnected through financial markets. As debt grows, so do the costs of simply maintaining it. The scale of modern debt is almost impossible to visualize. Debt has been rising for decades, but recent years have accelerated the trend. Debt has been rising for decades, but recent years have accelerated the trend.
Rising debt can place pressure on government budgets.
Foreign investors play a major role in government debt markets. The long-term path of the global economy remains uncertain. The choices made today could shape the economy for decades. The question is no longer whether debt exists, but whether it can continue to grow forever.
Every second, the national debt continues to rise.
The global bond market powers modern government financing. When spending exceeds income year after year, debt fills the gap. The global role of the dollar has helped support demand for U.S. debt.
Inflation is one way economies sometimes respond to rising debt pressures.
Interest rates influence how expensive debt becomes.
Markets often sense risk long before it becomes visible in the economy.
The charts are going crazy this morning.
Sell now before the bottom falls out. This is total chaos. It's just still falling.
Financial systems are deeply interconnected. Despite risks, economies continue to evolve and adapt. The real question is not how much debt exists, but how long the system can sustain it. Each year's deficit adds fuel to the debt spiral, making it harder to slow down. Markets around the world are monitoring the U.S. debt like hawks. Confidence here affects billions globally. Interest is no longer a minor concern. It now accounts for a large slice of government spending. Every debate over the debt ceiling makes the world watch, wondering what might happen if no agreement is reached. Countries around the world lend money to the United States. This global trust is a pillar of the debt system. The current debt bubble has grown larger than anything the US faced in 2008, with new risks looming. A default might trigger panic worldwide, but the system is still sustained by global confidence. The Federal Reserve plays a key role in keeping debt under control and markets confident. As the national debt continues to rise, public awareness grows and more citizens begin asking difficult economic questions. No one can predict exactly how this debt bubble will unfold, but the stakes are enormous. As debt rises, the bond market becomes jittery, and investors watch every move closely. Credit rating agencies closely monitor the debt, and any warning can ripple through global markets. Consumer confidence can waver quickly when debt spirals, influencing spending and the broader economy. The deficit clock ticks faster every year, a visual reminder of the mounting debt burden. Government bailouts stabilized the economy temporarily, but each infusion added significantly to the national debt. Interest payments alone are climbing every year, consuming a larger share of government revenue. The debt-to-GDP ratio is a key indicator of economic health, and the trend is rising sharply. U.S. debt trends ripple across global markets, influencing investor confidence worldwide. Rising debt levels create anxiety among investors as the future of markets becomes uncertain.
The debt is spiking. We need to hedge now. Volatility is through the roof.
Federal Reserve decisions can calm or shake markets depending on debt and economic signals.
Mounting debt forces the government to cut spending, affecting daily life for citizens. As the debt approaches its ceiling, political tension rises, risking default if unresolved. Volatility in bond markets shows how sensitive the economy is to U.S. debt levels. Rising national debt can lead to lowered credit ratings, increasing borrowing costs.
If unchecked, debt can spiral, impacting every part of the economy.
Rising national debt has real consequences on daily life, from groceries to gas prices.
I can't believe how much these prices have gone up.
Another hike at the pump. The government introduces measures to curb debt, but results take time to materialize. Forecasts show that unless managed, debt may continue to grow, affecting the economy for years to come. Understanding debt is crucial for the public as economic decisions affect. The numbers keep climbing. It's alarming.
This debt affects our future, our kids.
Yeah, it's a real wake-up call.
The debt is not just numbers, it's a national challenge that requires attention and action.
Rising interest rates increase repayment costs and put additional pressure on the national debt. This affects borrowing and threatens financial stability. The impacts are felt across the economy. Comparing deficit and surplus periods shows how government spending and revenue trends evolve over decades. U.S. debt is held by both domestic and foreign investors, and shifts in ownership impact economic stability. Mounting debt will eventually affect future generations, influencing taxes and public services. Tracking debt against GDP shows the relative burden on the economy over time.
U.S. debt levels influence investor confidence globally, impacting markets from Asia to Europe.
Debt-driven economic policies can contribute to inflation, affecting daily life for everyone. Understanding government spending helps us see where debt accumulates the fastest. Interest payments are a growing portion of the budget, limiting flexibility for other programs. Comparing historical debt crises shows patterns and potential warning signs for the U.S. economy. Political debates over the debt ceiling show how difficult it is to manage national debt responsibly. Deficit spending occurs when government expenditures exceed revenues, increasing the national debt. Rising debt can constrain government support for essential social programs, impacting citizens directly. High national debt can constrain defense spending, affecting national security priorities. Federal debt affects state budgets by influencing federal aid and funding allocations. Rising debt can reduce funding for vital infrastructure projects, affecting citizens' daily lives. National debt can limit funds available for retirement, affecting millions of Americans. Rising national debt can reduce available funds for healthcare, affecting quality and access.
We're seeing resource constraints impacting patient care.
It's a challenge to maintain services.
High national debt can reduce educational funding, impacting students and teachers alike. The U.S. debt trajectory will shape the nation's economic future, influencing generations to come.